Hello everyone, Professor MoneyPigTrading. Today, May 29, 2023, long time no see. Let's talk about we actually might not have enough time to lift debt ceiling. So let's take a look. What is debt ceiling? So basically, U.S. Congress can set taxes and budgets themselves. In the meantime, they can also set debt limits. So they're kind of like players and referees at the same time, which is kind of weird. And once the budgets are approved, it will send it to the White House, which will be responsible for executing the spending. And if there's not enough money or budget to run the government, the White House will also be responsible to borrow more money to make sure the government can operate. So what if there's overspend, right? Overspending. So that's why the debt ceiling is to introduce back to 1917, over 100 years ago, to avoid overspending on the government budget, to set this debt limit. And what if this debt limit is not lifted in time? That will cause a serious financial crisis because the US bond will default the first time in the history. And US bond has been considered as a zero risk financial assets because it never defaults. So if it defaults for the first time, it will create a huge ripple effect because there's so many things. Our banking system, even the stock market is based on the US bond. How bad it will be, your guess is as good as my guess, but currently I'm estimating at least 20 to 50% drop of the US stock market. So it's really a serious problem. And why this debt ceiling has been a thing, right? Like you have seen it many times, especially 2011, I witnessed the whole process. And every few months or every few years, this debt ceiling has to be raised. Why don't we just remove it, right? It doesn't make a lot of sense. In my opinion, the U.S. Congress creates and keep this problem so that because they are the only person who can solve this problem, right? So by keeping this problem, technically speaking, it can control the U.S. Government budget and spending. But to be honest, there's other better way to do this, right? But right now it's being held by U.S. Congress, so they can feel they're important, or people will feel they are so important because they are the one that creates or keeps this problem, and they are the only one who can solve it. So I just feel very disgusted that our retirement pension and everything is held by all these politicians, regardless of which party they belong to. So anyway, just my personal opinion. The current situation on May 28, 2023, there's a deal being agreed between the White House and the House, so that's great. So tomorrow, May 30th at 3 p.m. Eastern Time, there's a very important event. The House Rules Committee, they will vote whether they're going to bring this raised debt ceiling bill to the House floor to vote. Currently, there's a problem here. We only have 6 yes and 7 no. So we're 1 vote short. And if this thing doesn't happen, get approved, nothing down below will happen. And very likely, we won't be able to raise the debt ceiling by June 5th, 2023, which is the deadline. And that will cause, again, a serious financial crisis. So tomorrow, this 3 p.m. outcome will be the key. Whether we'll be able to get the results of the House Rules Committee voting results by market close at 4 p.m. Eastern Time, I'm not sure. I'm still double checking the White House specialists or experts. And let's assume this House Rules Committee able to pass the vote and move the bill to the House floor to vote on May 31st, which is a Wednesday. We need 218 votes. I do think, based on my count over the weekend, I do think we have enough votes at this level. So right now at the House level, we just don't have enough votes. That's a House level problem. And once the bill being move on to the Senate level, the Senate level does have enough vote. However, we might not have enough time. So let's say once the House approved the bill, if 100% senators agree to fast track the bill, it will take 1 to 2 days to move the bill to the senator to vote, which could happen in this case June 1st to June 2nd. However, we have seen, at least on Twitter, some senators have already said they are not going to vote for yes. So very likely, there will be at least one senator not agree to fast track. Then the bill will go through the normal process, which will take 5 to 7 calendar days. So in this case, the Senate vote will happen between June 5th to June 8, 2023. And don't forget the deadline is June 5th. So very likely, any process go wrong, any delayed, we won't be able to lift the debt ceiling by June 5th. So that's how tight the timeline is. So basically, there are 3 bottlenecks, right? First, the House Rule Committee on May 30th, May 31st, the House vote, and how this senator will fast track the results with the bill, and lastly, the Senate vote. So there are basically 4 different stages going to happen in the next 7 days, and that will affect the U.S. stock market quite a bit based on the headlines. So just be ready for the volatility. And I feel like the market has been very, very relaxed before this type deadline I mentioned above, right? So the blue line is the 2011 debt ceiling. You can see right before the deadline was not met, you can see the blue line is the S&P 500, and it dropped sharply in a week. And right now, the orange line is the current date, and you can see the market is pretty relaxed, just kind of fluctuating right now. Now the y-axis, the percentage change over time. So yeah, we can see if by June 5th, the debt ceiling is still not raised, we could also see the very similar drop. Back to that time, S&P 500 dropped about 12%. Small cap was a slaughter, dropped about 24%. So be very careful. Next week, this time, if the debt ceiling is not raised, we could see a very, very serious pullback. So how can we hedge our position on this kind of tricky situation that there's not much upside if the debt ceiling is approved, but if the debt ceiling is not approved, then the stock market can drop very heavily. So how can we hedge our long-term investment or whatever upside or housing assets that you have, right? So one thing to consider might be very small for you. We post on Twitter and Facebook is our Russell RUT index. June 9th expiration date, the 1600 put might be one of the options, because this contract might be deep in the money if the debt ceiling is not lived in time, because we assume the Russell 2000, which is small cap, will drop as much as 24%, right? So this contract could return 7,500% of returns if the debt ceiling is not lived, and the Russell 2000 also dropped as heavy as 2011 as 24%. So something to consider. Again, not financial advisor. Please invest on your own risks, but just some trading idea. Forgot to remove this. Let me remove it real quick. So what if the debt ceiling is lived in time, right? Like I mentioned, the short-term rally, especially on defense stocks, that we have witnessed that in 2011. Same thing can very likely happen again, especially on the defense stocks. However, the tech industry, we have seen the rally because of AI craziness. So I don't think we have a lot of upside here for NASDAQ, to be honest. But we still should be able to see some short-term rally on S&P 500. However, in August or September, this is still TBD based on the final bill. But potentially, the U.S. government needs to issue $750 to $850 billion of treasury bonds. And someone has to buy those bonds. So about this amount, 750 to 850 billion of market liquidity will be sucked away to fill this order of a U.S. Treasury bond, and that might cause a pretty decent pullback on the U.S. stock market. Let's just give you a visualization of how bad it is, right? The red line is the Federal Reserve, their helicopter money, or the SOMA balance is how much hot money they put into the market to support the market. And they have been trying to reduce this red line since last year so that they can fight inflation. And you can see the red line has been going up quite a lot since COVID-19. The dark black line here is the S&P 500, okay? And if the U.S. newly issued treasury bond, 750 to 850 billions, that will equal to suck it up this red line from here all the way down to here, okay? That means the Federal Reserve or the market liquidity will drop almost at pre-COVID-19 level, right? So what does that mean? I do think that can create a pretty decent pullback, especially on the growth stock, which are affected by this market liquidity quite a lot. So maybe we'll see a 10-15% pullback, but let's leave the analysis for the future, especially when we have more details about the bill, and we'll make the discussion in the future. So yeah, if you like the video, make sure to follow us on www.moneypigtrading.com. We have a pretty robust Discord community, and also our Twitter, YouTube, Instagram, Facebook, all MoneyPig Trading. Thanks for watching. See you guys in the next video. Bye-bye.